Hi, my name's Aisha, and in today's video I'm going to be doing another requested video, and I do have to apologise because this person asked for this video quite a while ago now and I completely forgot about it, and I was just looking through my channel, I saw the comment and then I thought, okay, let me quickly do that video because it's been a while, so sorry about the delay. So the comment was asking about porting mortgages, and so I'm just going to talk about that in today's video. I guess it's really more for homeowners, people who are already on the property ladder, rather than those who are working towards being a first-time buyer, but I'm sure the information will be handy and it's something that you could use for the future for when you do get onto the property ladder. As I always say with these types of videos, I'm not a financial advisor, I'm not a mortgage broker, I'm not anything like that, and so this is not financial advice of any sort. It's just me talking about my own experiences, the things that I've personally been through, how things have personally worked for me. So if you're looking at porting or you're thinking about home ownership just in general, just use these videos as like a little bit of information and then you can research more from there. It's not me telling you what to do or telling you the best way to go about it. I'm talking about what's worked for me. If you're unsure and you've researched and you're still unsure, then you can always consult like a mortgage advisor or a mortgage broker or something like that and get more information from them. There are so many professionals out there who can even just give you free advice, like quick free advice if you're not sure about something. So get in touch with someone if you're not sure. Okay, so what is porting then? In very basic, simplistic terms, it's basically just moving your mortgage from one property into another property. So if you take out a mortgage like I did on my flat, which was my first property, the value of that mortgage was £87,400 because it was a 95% mortgage, and I took it over a term of about, I think it was 35 years. Over the time that I owned it, for about 2.5 years or so, I paid my mortgage every month, and that paid down the amount that I owed, and it also, obviously the years ticked down as well. So it goes from being 35 years to being like 33 years. And then let's say the value of the mortgage then went down to £85,000, because remember, like I said to you, paying your mortgage is not just lost money. Some of that money then goes into paying down that capital amount, and so you end up with even more equity in your house. So these are obviously just hypothetical numbers, it's just to illustrate the point, but let's just say it went from £87,400 to about £85,000. So when I was buying the next property, which was my previous house, the 3-bedroom house that was in Kent, I obviously wanted to take that mortgage with me. The reason why I wanted to take that mortgage with me was because I had previously taken out a 2-year fixed term on my mortgage. After 2 years, I was still at the flat, and so I remortgaged that, and I think I took out another 2-year fixed term, and so I was in between terms. If I'd paid off the mortgage when I was selling the flat, the bank would have charged me exit fees because I was in the middle of my term. If I'd waited until the rest of those 2 years were up, I wouldn't have to pay any money, but if you go in the middle, then sometimes you have to pay an exit fee. I think my exit fee at the time was around £1,700, and so obviously no one wants to pay an extra £1,700. If you can avoid paying that, then that's a good thing, I think, rather than losing money. I had also used the bank's online mortgage calculators, like I've showed you in the previous video, which again I'll link, and it come out that my mortgage was still the cheapest option. If I'd found a deal that was a better deal at another bank and it didn't matter because I was going to save more than that £1,700, then I would be happy to just take my money elsewhere. But because there was no better deals for mortgages at the time, it made sense for me to not lose that money and to keep the same mortgage. So what I did was I asked my bank if I could port that mortgage, and I don't think it happened just like that because I didn't know anything about porting at the time. So I think I went through the same process again as I went through when I bought the flat. So I found a house, I looked at my affordability using the affordability calculators. My bank was the cheapest bank, and then I approached my bank as though I wanted a mortgage. And when you go through all of the different criteria with them, they realise you already have a mortgage, and then they ask you, okay, do you just want to port that over because that's the best deal for you at the moment? And so that's what I did. Instead of applying for a whole new mortgage, I ported the mortgage onto the other property. So in the most simple of terms, what you were doing on your first property, you continue to do on your second property. If the numbers all stack up, so for example, I bought my flat for £92,000, I sold it for £138,000, and if I had found another house that was £138,000 to buy, then everything would have just ported over nicely. My monthly payments would have been the same, the term would have just continued ticking down, everything would have been exactly the same. What happens is the original deposit that I paid, which was just under £5,000, that gets moved over, the equity gets moved over, your mortgage gets moved over, and everything just stays the same. I think when I'd remortgaged after the initial 2 years, my monthly payments for my mortgage was like £295, and so on the new house, that same amount was £295 as well. It's not that simple though, unless your houses are the same amount. So you sell your first property for a certain amount and the house you buy or the property you buy is again the same amount, then things can go smoothly. But that's obviously not how it's going to be, because for the most part, I think unless you're like an empty nester and you're downsizing, you generally move properties to either increase your space or to get a better house or something like that. And so generally the property might be more expensive. The house I went on to buy costed £204,000. And so there's like a discrepancy of £66,000. That £66,000 had to be covered somehow. And there are two ways of covering any excess money that you need to add to be able to buy the other house. If you have savings stashed away somewhere, which I did not, and most people don't have that kind of money just lying around that they can put into a house, then you can just do that. You can just pay the extra money, and then again, your payments would stay the same, your mortgage would stay the same, there's no dramas. Once you go through the process of conveyancing, exchange of contracts, you would just send your solicitor that extra money. So in my case, it would have been £66,000, and then they would just forward it onto the bank and transfer everything over ready to go. But the average person doesn't have that money lying around. And so the other way you can do that is get reassessed in terms of your finances, and you can try and get approved for an additional loan. So I had to then get approved for an additional loan, which I was able to do because I've already said on a previous video, I think, that teachers, their wage goes up every year because public workers generally get more money from the government each year. We didn't get a pay rise this September, but usually you get a pay rise. Also, how it works is that when you first qualify as a teacher, you start off on like at the bottom scale, and then every year, as long as you're doing your job properly, you go up. And so as time went by, my salary went up, one, because the government give us more money every year, and two, because I went up the scales each year. Also, after buying the flat, I'd moved to a different job and I had TLRs, so I had responsibilities. And so with those responsibilities comes more money. So again, my wage was just a much better wage in general. Again, I've said in a previous video that the bank will take your wage and then they'll multiply it by a certain number, whether it's 5 or 4.5, whatever it is that they're using. And then they will use that to come up with the amount of money that you can borrow. Obviously, they take debt and things like that into account, but in the most simplest of terms, however much money you have, they times it and then they give you that amount to borrow. Obviously, if your wage is higher, then you're going to be able to borrow more money. And so for me, I was able to borrow more money. So how it works is, or at least this is what they did for me, is they left the original mortgage how it was, and then they created a second mortgage to be able to cover that £66,000. My extra wage didn't cover that whole $66,000 though. Obviously, when I sold the flat, there was some equity that again went onto the property, and so whatever the remaining was, they figure it out what the loan to value is, and then they give you a second mortgage based on all of the remaining amount. So that's why in previous videos I've said that I have 2 mortgages running on my house. So on my previous house I had 2 mortgages on it. On this house I have 2 mortgages on it as well. You don't pay 2 separate payments though. When you log on to like your online system, you can see mortgage 1, mortgage 2, and then they combine it together and they just take one payment of the total value out each month. So it doesn't have to be complicated for you. The only thing that's a little bit annoying about having 2 mortgages is when the terms end. So 1 year the term will end and I have to find a new mortgage for that part, and then the second mortgage will end the next year and then I have to again remortgage to do that. But I think I figured it out now. So I've added 1 year or minus a year onto one of them, and so they now finish within a couple of months of each other, and when the time comes I will decide whether it's going to be best to find an entirely new mortgage or whether it's good to just again do them separately so that I can benefit from different rates. I'll decide. I probably might go to a mortgage broker, to be honest, so that they can figure out what's the best way to work it out. The good thing about having 2 mortgages though is that one of them might be like 1.5% and then the other one might be 2%, and so on half the mortgage you're paying less money, whereas someone might have an entire mortgage that is 2%, if that makes sense. So I feel like in some ways I could be benefiting from having 2 different mortgages at 2 different rates, so I'm paying back less interest on one of them. Obviously, I've moved again. I'm now in this house, and again, I've ported both of my mortgages on, so I still have my 2 mortgages running alongside each other. I didn't get additional lending this time to be able to afford this house. The equity is enough to cover my change in circumstances. The thing you have to be mindful of with porting is that they do actually check your financial situation again. And so you can't just think, oh, I'm affording my mortgage. The bank knows I'm paying my mortgage every month. I just want to transfer it all onto another house and keep everything the same. It doesn't quite work like that. They do reassess your situation. And even if you're being able to afford your mortgage, if you're earning less money or you've built up more debt, they might then say, actually, that's unaffordable for you, even though you're actually making those payments still. So with me, for example, I'd actually changed jobs again and I'd gotten rid of my responsibilities and I was working part-time. I wasn't even sure if I wanted to teach anymore. And so I was actually just doing a maternity cover for 1 year just to kind of phase myself out of teaching. And so that's why I was looking for properties that were cheaper than my house, because one, I had to, and two, I wanted to do a renovation anyway. And so the property that I'd showed you in Gillingham, that was £178,000. So there's a little bit of difference between the 178 and the £204,000, and that should have compensated for my wage at the time. But just thinking about that though, it kind of makes me feel like this house was meant to be even more, because like sometimes I'm like, why am I even here? I'm in a whole different town, in a whole different place. Like I had absolutely no intention of buying this house, but just thinking about how I actually managed to then change jobs, and I got again a responsibility. I was working for a federation, so they gave me a bonus, and then my wage was much closer to my original wage that I had when I bought the house in the first place. So yeah, it kind of worked out well, because I could have been jobless after doing that maternity leave and had nowhere to go, or I could have got a similar job, or I could have got a lower paid job. So yeah, the new job helps me to be able to afford this house. So I'm supposed to be here. I need to figure out what my next move is though. So just to be completely transparent, I had just about enough equity to be able to afford the deposit for this house and then keep my mortgages the same. And then my mum had given me some money. I did a little deal with her and she had given me some money. And so I used that money to pay off my debts, which meant that, again, they didn't drop down my amount that I was supposed to borrow from them. So I was able to just put everything over and everything stayed the same. I do wonder though, if I was trying to get something that was even more expensive and I'd gotten like, I don't know, a really amazing job that gave me so much money, I wonder if they would give me even more additional lending and give me a third mortgage on my house. I don't know how far they're willing to go and how many parts you can actually have on your mortgage, but I have two, so I don't know. The other thing to say about porting, which is really important, and I've previously mentioned this before, is that you can delay the porting of your mortgage. And not a lot of people know that. I didn't even know that. And the person who I was speaking to at my bank actually didn't even know it. He had said something to me and I don't know what he was actually originally talking about, but in my head I interpreted it as him saying that I could delay the porting of my mortgage, and this was before I even needed to delay the porting. And so when I sold my house and then the property in Gillingham fell through, I was kind of a bit stuck, and so I went back to him and I was like, oh, what was that you were saying about being able to delay the porting? How long do I have? And he was like, I don't know what you're talking about. And he was like, I've never really heard of that happening. And he was like, let me find out for you. And so he went to ask someone else, and then they came back to say that yes, you can delay porting and you have 90 days to do it. And so that's a good thing to be aware of, because I know especially for those people who are buying new builds, you might sell your property and then there might be a delay with the new property being ready. And so you might have a time where you need a few extra weeks or a couple of months or so where you might still want to keep your mortgage and transfer it over, and you can delay the porting. Whether all banks do that, I don't know, but my bank does it. And I think I saw a comment on like a thread where someone was asking about it, and another bank do it as well. So it is probably something that quite a few of the banks probably do if you ask and if you need it. So how it worked is the solicitors, on the day of completion when I sold my house, they paid off both of my mortgages, so I didn't actually have a mortgage anymore. And then they sent me the money, that was the equity, into my bank account. But actually there was a bit of a problem, because I was looking at my online mortgage account and one of them had disappeared and the other one still had some money on it. And it was a bit of a rigmarole to try and figure out why was my mortgage not paid off, because it should have been completed. What had actually happened is that obviously when I was selling my house, the solicitors get to a point where they need a redemption statement so that they know what money is going where. So the bank sent that over. And then after, what had happened is that I remortgaged because my rate had ended. Obviously, I knew I was going to port my mortgage, and so I needed to change the rate. The rate was a little bit higher, and that meant that there was some missing money, and so my mortgage didn't get paid off. And I could see this amount sitting there. I'm like, why do I owe you £800? And no one could tell me anything. They could not figure it out for the life of them. And eventually someone went and investigated properly, and they figured out that it was because I'd changed my rate, and so I needed to pay them like £800 more to be able to clear the mortgage. So when you're porting, you clear your mortgage completely, you get the equity, and when you go through the process of buying your new house, you have to send that money back to the solicitor when it gets to exchange so that you can then complete on your house. On the day of completion, the bank just put those mortgages back there, same rate, same length, same amount, and it just continues on like nothing happened. And so, yeah, you have to be aware that you do have to actually clear that mortgage if you're doing a delay porting. they do take the early exit fees out of the money that you get back into your bank account. And what they'll do is they give you back the money that you spent on the exit fees. So you have to pay it initially, but then you get it back. And how long that takes, I don't really know. Some people say it takes a couple of days, but for me, I think they almost forgot because everything kind of happened on the 90th day. So it was right at the last minute. And I actually had to call them and ask them. Then they had to figure it out and then they sent me the money. But once I called them, it came through pretty quickly. So if they're on the ball, I think you get it pretty much straight away. But if they forget, then you might have to prompt them like, where's my money? The only other thing to say is just make sure it's financially the right thing to do, because yes, you can put your mortgage, you can take them with you, nothing changes. It's nice because you don't have to think about anything. But actually, if there is a bank out there or there is a lender out there that can give you a better rate that allows for any loss that you would make, then it's a better deal to then just get a new mortgage and pay off the old one. But for me at the time, both times when I've been moving, no one can undercut the rates that I have or the amount that I would need to pay back in terms of the exit fees. And so it just works out that I just have to stay with the same bank and port my mortgages instead of paying it off and getting a new one. The good thing about porting, I think, is that it seems to be much easier. So whenever I've had to port onto a new house, like this time, they just asked me for like one payslip. They didn't ask for any other documentation because obviously where my salary goes into that account and my mortgage is with the same lender, it's just all, it's there for them to see. They don't have to check who I am. They know who I am and they can access everything. So it was just one payslip. So that's nice and easy. You don't have to go scrambling around for like documents to be able to prove who you are and what you want and all of the rest of it. So it's good in that way. So in terms of how you initiate that conversation, obviously you need to get your house sold first, or you need to investigate converting it to a buy-to-let, because not everyone moves on and sells their old house. Sometimes they transfer it. So again, you need to think about the money and what strategy you're going to do. But once you know what you're doing and you've got your deal for your house locked in, then you need to look at properties that match your wage, match your salary, your debts and everything. And again, just use the online calculators for that. And then you can figure out whether porting is even like possible or whether it's possible for you to move. It might be that it's not the best decision because the numbers don't work out and you can't get the house that you want. But if it all works out properly, then again, you just do what I do. You go to your bank, you tell them, oh, I've seen this house, I want to buy it. I've got someone to buy my house for this amount of money. And then they can figure out the numbers for you and they can deal with the porting for you as well. Obviously, if you're looking at houses to buy and to be able to put an offer in, you need an agreement in principle. And so how I do it is I just, again, use the online calculators. I put in all of my details and it asks you about mortgages, whether you're paying them off, how much equity, what the prices are, and you have an AIP. And those figures, again, if you've done it properly, it should just be a formality with the bank. It should just all work out and it should be fine. So you will know how much you can afford when you go to put an offer in on a house. I think both times I've actually just gone into the bank and asked to speak to the mortgage department, and then I've had that conversation from there. And usually I do like an online telephone consultation with them where they talk through wages and stuff. But you can just call them up as well, I'm sure. So yeah, you don't really have much to do. You just call them and tell them what you want to do and they sort it all out for you. It's not complicated at all. Between the solicitors and the bank, they get it all done. The money gets to where it needs to be. It's only in rare circumstances, like with mine, where I'd remortgaged, for example, where the money doesn't stack up or there might be an issue. But for the most part, it just goes through nice and smoothly. I would just be careful about being realistic about how much you can afford on a new property though, because you might sell your house and you might think it's going for like £200,000, for example. And then you might think, oh, I've got £200,000 there, I can transfer that on. You can do all of your numbers and then your house might go for less. So like me, when I've sold both properties, they've both gone for less money than what I've put them on the market for because of, I guess, the timing of things. And so the money that I had to be able to buy a new property had to change as well because there was less money involved. So yeah, just be realistic about how much your property's going for, how much you can put towards a new property, whether your finances have changed, and it should be fine. I think that's pretty much it for this video. Hopefully that's been somewhat informative for you. Like I said, it's not formal advice. Make sure you do your research, speak to a mortgage advisor before you do all of these things. There's so many great mortgage advisors out there. I think before I couldn't really recommend one, but I've used this one woman that we have as a family mortgage. I don't know whether she's like a financial advisor or a mortgage broker, or maybe everything rolled into one. She also has solicitors attached with her firm as well, and she is amazing. She's so good. If there's something you want to achieve, she'll make it possible, and it will be legal, and it will be like she'll help you to achieve exactly what you want or more than what you want. And so I do have one that I can now recommend, but anyone will do. Like I said, there's so many out there that can give you free information. So if you're confused or you're not sure, then just get in touch with someone, and they'll be able to help you. Don't forget to like the video if you found it useful, and leave a comment down below. Don't forget to subscribe if you haven't already subscribed, and you take care of yourself, and I'll see you in the next video.